Are you ready to take control of your mortgage and find the perfect one? We're breaking down all the features that will help you determine which ones you need and which ones you can skip over. By the end of this video, you're going to have all the knowledge to make great decisions and feel confident with your home loan choice. So let's dive right in. First up, let's talk extra payments. This feature can be incredibly helpful because it allows you to pay more towards your mortgage each month or make one lump sum payment. The extra payments go towards reducing the principal, which is the amount of your loan, and it can save you money by the long run by reducing the amount of interest you pay. But do you really need this feature? It definitely has heaps of benefits, like saving you a stack of cash and helping you pay off your home loan faster. For example, my friend Rachel was really determined to pay off her home loan as quickly as possible. She started making an extra $200 a month on her $600,000 mortgage. And let me tell you, it paid off massively. She was able to save nearly $45,000 in interest and pay off her home loan almost 5 years earlier than she would have otherwise. Now, there are some things to keep in mind with extra repayments. Some home loans have restrictions on the amount of extra repayments you can make, or potentially charge fees for making extra payments or taking them back out. And if you have a fixed rate loan, many of these loans won't allow you extra payments or have limitations on how much you can pay in extra per year. So it's important to consider whether this feature is going to benefit you and your goals. If you think it would be helpful, be sure to have a look for home loans that offer this feature without too many restrictions or fees, or speak to a mortgage broker like us. Next up, let's talk about Redraw. This is another feature that can be incredibly useful because it allows you to access extra payments you made on your mortgage. So if you put extra funds towards your mortgage, you can use those funds for other purposes. But is a Redraw facility right for you? It can definitely have some massive advantages, like providing access to cash for unexpected expenses or emergencies, or helping you reduce your interest payments while you're saving for future goals. But be warned, some home loans do charge fees for the Redraw facility, and Redraw is not often available on fixed rates. There was also an issue a couple of years ago with MeBank where they cancelled their customers' Redraw facility. They don't get into a bunch of hot water and reinstated not long after, but be warned with this. There's also tax implications, which we won't go into this video, but if you are thinking about turning the property into an investment in the future, then Redraw might not be the right thing for you. It's important to chat through with your mortgage broker about your now and future goals to ensure that this feature is the right one for you. So what about offset accounts? Are they worth the investment? An offset account is a type of transaction account that's linked to your home loan. The balance of your offset account is taken into account when calculating the interest on your mortgage. In other words, it means that the funds in your offset account can offset the amount of interest you pay on your home loan. But do you need an offset account? It can definitely be a great feature, especially if you want a bit more flexibility than Redraw. With an offset account, the money is available whenever you need it, just like a normal transaction account. Well, in fact, it is a normal transaction account. It's just linked to your home loan. But it's important to keep in mind that an offset account can come with additional costs, like annual fees or potentially higher interest rates. So it's worth speaking with your broker to see if this is right for you. Another good benefit with offset accounts is you can set up like a barefoot investor style account. Some banks will support multiple offset accounts, helping you save interest every month. Just ask Marina. When she got her home loan, she was determined to find the best possible deal. And after speaking with us, she decided to go with a home loan that included an offset account. She had her salary and all other income paid into the offset account and watched as the balance grew over the years. And when it came time to pay off her home loan, she couldn't believe how much money she'd actually saved thanks to the clever use of her offset account. She was able to use her offset account and a credit card with 55 days interest free to help pay off her home loan way quicker. So is an offset account right for you? Well, you have to look through the features and benefits, sit down with your mortgage broker or give us a call to work it out. Now it's time to talk about split rate home loans. That's a mortgage that combines a fixed interest rate with a variable interest rate. This type of home loan can be a great option for borrowers who want the security of a fixed rate, but also want the flexibility of a variable rate. With a split rate home loan, you can lock in a portion of your mortgage at a fixed rate and take advantage of any potential decreases of interest rates with the portion of the loan that's variable. Plus, you can make unlimited extra payments on the variable rate. But is a split rate right for you? It could be if you're concerned about rising interest rates, but still want the benefits of an offset account or Redraw facility. Equally, if fixed rates are lower than variable rates and you can expect to make extra payments, a split rate home loan could be worth considering. Just keep in mind that split rate home loans can be a little bit more complex than traditional fixed or variable rate loans. You might have additional fees to have two splits depending on the bank. So if you're considering splitting the rate, it's worth chatting to a mortgage broker or giving us a call to see if it's suitable. I had a client named Alex who was in a similar situation. As a mortgage broker, I often work with clients who are looking for, creative solutions to their home loan needs. Alex was expecting to receive an inheritance of $20,000 and he wanted to use this money to pay off a big chunk of his home loan, but he wasn't really sure what kind of home loan would be the best fit. And this is where a split rate home loan comes in handy. By splitting his loan, he actually went for a 50-50 split. Alex was able to take advantage of having lower fixed rates and lock that in for a couple of years while having the flexibility of the variable rate. And when he received the inheritance, he was able to pay off the extra $20,000 without any penalties, actually saving him a bunch of money in the long term. If you're facing a similar situation, reach out to us. We'd love to help out. As mortgage brokers, we can find the best home loan solution for your needs so you can take control of your mortgage. Now it's time to talk about interest-only home loans. This is where the mortgage only pays for the interest on the loan for a set period of time. This means you're actually not making any progress towards paying off the loan itself, just the interest the bank's charging. But do you need an interest-only home loan? Interest-only can be useful if you want to keep the monthly mortgage repayments low, at least initially. Generally, do it for 1 to 5 years. However, keep in mind, these loans can be much more expensive in the long run because you're still responsible for paying off the loan amount at the end of the interest-only period. Some lenders may require you to have a higher level of equity or deposit in your property when taking out an interest-only home loan. And oftentimes they won't do it on owner-occupied home loans. It has to be on investment property. For that reason, these loans are often popular with investors. They can claim interest on their home loans as a tax deduction, and the reduced repayments can help with their cash flow for the investment property. Very infrequently do first home buyers actually opt in for this type of home loan, because it does cost you more over the long term. So is an interest-only home loan right for you? Generally speaking, it's only going to make sense for property investors, or if you're going to buy a home to live in for a very short term, then turn it into investment property. Robert, a property investor we helped out, found an interest home loan to actually be a good decision. It allowed him to make lower monthly repayments, meaning that he had more rent left over or cash flow in his properties to invest and build a portfolio. Plus, his net rent that he got from the tenant was higher than the interest-only repayments, meaning he was actually cash flow positive. If you're an investor looking to maximize your cash flow or your income, interest-only can make sense. Next, let's talk about repayments. A lot of home loan borrowers choose their repayment cycle typically between weekly, fortnightly, and monthly payments. This can be pretty useful because it can help align the mortgage repayments with your income cycle and help you make more progress to paying off the loan faster. But did you know paying fortnightly payments instead of monthly can actually result in 1 extra payment per year, which can help reduce the total interest on the loan and pay off your loan quicker? But is it worthwhile doing? If your home loan allows it, choosing a repayment cycle that works best for you can actually help you save money on the mortgage. Making weekly or fortnightly repayments instead of monthly can add 1 extra payment per year, which can literally save you thousands of dollars over the life of your loan. Definitely keep in mind your budget and financial goals when you're working out the repayment cycle. You don't want to get caught out. And keep in mind any future interest rate rises because those repayments are going to go up. Ultimately, it's going to be your decision to work out which repayment cycle is going to benefit your situation best. But let me tell you, switching to a more frequent repayment cycle can make a huge difference. As a mortgage broker, I've seen this firsthand with clients like Dave. Dave was interested in switching his repayment cycle from monthly, which is bank set up by default, to fortnightly, and wasn't sure if it made a big difference. After doing some research and calculations, he realized that by making fortnightly payments instead of monthly ones, he could save $25,000 and pay off his loan 2 years faster with an 880 loan with a 4.25% interest rate. Dave was excited by the potential and decided to switch, and as it turns out, it was even more beneficial than he expected. Not only did he save a bunch of money, he was able to pay off the loan much faster and achieve his goals of buying an investment property after his home loan. So if you're looking for ways to save money in your home loan, switching to a more frequent repayment cycle is definitely worth considering. Next up is Repayment Holidays. This is a short-term break from mortgage repayment. A repayment holiday is a feature offered by some lenders. It was pretty common during COVID that allowed borrowers to temporarily stop making payments on their mortgage. It can be a pretty useful feature or necessary if you're experiencing financial hardship, if you've lost your job, and you might need some time to work through that period. But just keep in mind, by taking that repayment holiday doesn't mean your loan is forgiven or that you do not have to pay back those repayments at a later date. Instead, the missed repayments are typically added onto your loan and they might even extend your loan term, meaning you're going to pay more interest over the life of the loan. So is this benefit worthwhile having? You may not choose this up front. A lot of banks offer this if you do get into financial hardship. It's worth doing the numbers to see how much extra it's going to cost you by adding that extra principal or those extra repayments to your home loan over the life of the loan. But that being said, a repayment holiday can be a lifesaver. Just ask Rachel and Ben, who used the repayment holiday feature on their home loan when they lost their job during COVID. Rachel was working in travel industry and it was pretty much closed, so she needed a repayment holiday to try and change industries and find a new job. The payment pause for 2 or 3 months gave her time to get a new role and a bit of breathing room they need through a bit of an unpredictable time. At least it took the stress and the worry out of missing the repayments and having to pay default interest rates later on if they get worse and worse. If you're facing a similar situation, don't be afraid to ask your bank. A lot of banks are happy to work with you if you've come into an unexpected situation. A repayment holiday should only be used as a real last resort, but it's important to have it in place if you really need it. Next up is line of credit home loans, a mortgage that typically allows you to borrow funds up to a certain credit limit as needed. Now, this can be pretty useful for borrowers who want flexibility with funds rather than just pulling out the money and having it there. A line of credit is pretty much like a credit card attached to your home loan. You can draw down the loan as needed and only pay interest on the funds. It actually adds the interest to the loan itself. These are a pretty popular product over the last few years, but a lot of banks have phased them out because technically you don't have to make repayments on them. The repayment just keeps getting added to the loan until you hit your limit, and that's when you have to start making repayments. So is this an important feature to have? For most home buyers, it doesn't make sense to get a line of credit. A lot of banks will do an interest-only home loan instead. It's going to have lower interest rates and lower fees. But for some sophisticated investors, they prefer to have it. They can move the limits around. They might put money in shares and different opportunities. All right, let's talk about loan portability. This is a feature offered by some home loan lenders that allows you to take your mortgage with you when you move to a new property. Now, this can be a pretty useful option if, for example, you have a fixed rate that you might fix at a very low rate a couple of years ago, and you were looking to upgrade homes. And if you sell your home that's got your old fixed rate, you potentially lose that and have to get the current market. They sometimes call this security swap or substitution of security. Is this feature worth it? Well, definitely. If you've got a fixed rate of 1.99 or 2%, the current market's at 4 or 5%, it's worthwhile looking at. But keep in mind that the banks will have new requirements and you have to reassess your income now. They have to see if you can still make repayments on those home loans based on your situation and interest rates today. And you pretty much need to line up the sale of your old house and the purchase of the new house all on the same day. Each bank has a different way of looking at this. Some banks will flat out say, no, it's not possible. Others are fine. Speak with your mortgage broker or lender to see if it's going to work in your situation. Let me tell you about one of our clients, Emily, who really benefited from this substitution of security facility. She bought a home 2 years ago, had fixed her rates for 4 years at 1.99%. Unfortunately, Emily had grown out of her home and wanted to upgrade, buy a new home. Emily sold this house, bought a new house. They're going to settle on the same day. Can we do it? And we were able to actually switch the home loan from the old house to new house on the same day and get a slight increase to cover the new expenses. It is a little bit of a different process. The banks will still go through their full assessment, but when you get to the loan contracts, things are a little bit different. So you want to have a mortgage broker that's experienced with that. If you are in the situation, hit us up. Happy to chat through and see what's going to work for you. Next up, we've got professional package discounts. This is a feature that can give you a bunch of extra benefits and discounts with the lender. But is it worth paying the annual fee? First, let's talk about what you can expect from a professional package. This type of product is generally available for loans over $250,000 and includes perks like waived application fees, waived monthly fees, waived valuation fees, and generally interest rate discounts. Plus, you'll have your credit card fee potentially waived with rewards, discounts on insurances and other loans. But all these perks do come at a cost. Most professional package fees will come with an annual cost of about $400. So you definitely want to consider if it's worth it for you compared to, say, a basic home loan. This is where a broker like us can weigh up the pros and cons to see what the costs are going to be over a 10, 20 or 30 year basis. Take my client Mike, for example. He was a high-end professional and was borrowing over $300,000 for his new home. With the professional package, he was able to take advantage of the discounts and benefits, including setting up 10 different offset accounts to run all his accounts like a barefoot investor. Compared to a basic home loan, it actually did save him a bunch of money. But generally speaking, if your loan's under $250,000, a professional package may not be worthwhile for you. Get your mortgage broker to weigh it up and see what's going to work in your situation. Wow, so we've gone over a ton of different home loan features and it's up to you to decide which one you're going to need and which ones you don't. But let's be honest, it can be pretty tough to go through all these options on your own, not to mention all the different lenders who have different products and different things. That's where we come in. As a team of mortgage brokers at Galloway, we help you understand your options and find the perfect loan for your unique situation. We've got your back and we're ready to guide you through the process, step by step. We'll make sure you get a loan that's right for you and your situation. So don't hesitate to give us a call on 1300 088 065 or head to our website at huntergalloway.com.au and complete a free assessment to speak with one of our mortgage brokers like Nathan or I. We want to help you take control of your home loan journey and make the best decision for your financial future. Until next time, see you guys.